All right, good morning, folks. Thank you for calling in today. I'm Jennifer Baker, President of the Columbia River Economic Development Council, and today is Friday, March 20th. I want to put out an advisory that we are making an attempt to record today's resource information delivered so that we can repurpose that information for future distribution. So please consider yourself advised that this session will be recorded today. Our CREDC team has been working to compile the most up-to-date business resources to share, and you can find this dynamic information on our website at credc.org, and also if you are following our social media handles. We're here today, and joining us by phone are our colleague Darcy Hoffman, close partners with Workforce Southwest Washington, and guest speakers from the U.S. Small Business Administration Office of Disaster Assistance and the SCORE State Director who covers Oregon and Southwest Washington. COVID-19 is affecting companies in different ways across industries, and we recognize that there is no one-size-fits-all approach to business resilience. So the information we're providing today is a summary geared at talking you through some of the most widely reaching assistance programs, and your input through our CREDC survey will help us further customize the type of information that we're reaching out for and then seeking to convey both to you and to policy stakeholders. So you will be able to, if you have not already, log on to our CREDC website and click on the survey button and share your input. We've already received input of economic injury from about 100 companies, and certainly are able to better direct our resources and our efforts the more feedback we receive from you. Now, before we kick off today's program, I know there has been some reporting and certainly a lot of inquiries about Clark County's inclusion in the SBA Office of Disaster Assistance Disaster Declaration for Clark County. I understand from the Office of Disaster Assistance that declaration is queuing now in Washington, D.C., and we are anxiously awaiting and touching base regularly with SBA colleagues to be able to put out to you the information as soon as it gets published. Know that the process is in the works and that Clark County is due to be included, and that we will be very excited to make that announcement to you as soon as it comes to bear. In the meantime, we'll receive resources today for how companies can best accumulate the right documents and be prepared so that when Clark County is announced, you will have all of the information to represent your business and to make your strongest application to apply for that disaster assistance. And our guest speakers today will be able to provide you additional information to that end. So again, thank you for calling in. Please refer to our website and our survey as resources. And with that, I'll pass the mic over to my colleague Marnie Farnes, CREDC's Business Relationships and Strategy Manager.
Great, thank you, Jen. So our speakers today are arranged in this order: financial assistance, employee support, and then finally guidance and planning resources. So if you'll take a moment to notice on the right-hand side that we have the chat function, please use this to ask questions. And for the sake of time, we'll try to consolidate questions. It's our goal to have some time at the end of this webinar to answer some of those questions. But if we should run out of time, then we will try to address them after the webinar. And then, of course, you can always check our website, and we encourage you to do so. So first, allow me to introduce to you Shashil Kumar from the U.S. Small Business Administration Office of Disaster Assistance. Shashil, thank you for being on the call today. And if you could unmute yourself, let's see if that will work.
Good morning. How are you?
Hi, Shashil. Good. Thank you again for being with us.
I'm glad to serve. Appreciate you setting all this up, and pleasure to talk to you folks again this week. Morning, ladies and gentlemen. Appreciate your time. during these unprecedented crises times, the Small Business Administration is stepping up to assist with the needs of the many. In this case, businesses that have no revenue or very little revenue in this particular case. And these loans are meant to address the revenue shortfall that businesses across the industry spectrum are feeling. I'll go over the loan amounts, interest rates, features, benefits, eligibility, ineligibility, use of proceeds, and overall the contact numbers for you folks to reach out to us. So let me start off on slide 4, if I may.
Is it this one?
That's number 1. It's the one that breaks down the economic injury disaster loan definition.
Okay. 1 second.
Of course. Can everybody hear me clearly?
Yes.
There you go. Thank you very much. That's 4. They're all numbered at the bottom just in case. And we'll go from there. So here we are. The definition of economic injury is pretty much bullet pointed in number 2, which is a business that's unable to meet its obligations and pay its ordinary necessary operating expenses as a result of revenue shortfall, revenue disruption. Both those cases apply. $2 million maximum. Interest rate for nonprofits, 2.75%. Businesses at 3.75%. Maximum statutory term, 30 years. No fees, no points, no closing costs, no prepayment penalty. And your first payment is due a year from when the loan is funded. Earlier this week, it was a much shorter 5 months. Now it's up to 12 months. That's how dynamic the situation is, where we're updating the first payment to be repaid. It provides necessary working capital to help small businesses until normal operations resume. Given the unprecedented nature of this event, we don't know when normal operations resume, so we are encouraging business owners to apply for the maximum sums of money they believe they can qualify for. The injury period, defined as when revenue shortfall started taking place, is the 31st of January. So as long as your business was in operation prior to that date, sole props, any business owner, Schedule C, and any other complicated tax entity could apply. And by that, I mean 1065s, 1120s, 1120Ss, limited liability corporations, things along those lines. Next slide, please.
Are you there?
Yeah. Next slide, please.
Oh, can you not see it?
Yeah, the next one. I don't see it. I'm still on 4.
Oh, okay. Sorry. Right here?
Yes, just go down 1. Just keep clicking on the left side. It'll go slide from slide to slide. There you go. This particular slide talks about eligible businesses. We will talk about further down the pike ineligible businesses, which run the gamut of churches, charitable organizations, and things along those lines. But for right now, this slide really talks about businesses of all sizes, directly affected by the disaster. And across the spectrum, across all industry standards, there have been businesses that have been impacted severely and deeply. So we encourage all businesses to apply. Next slide, please. It helps making working capital needs. Now, for all those business entrepreneurs on the telephone, definition of working capital is cash plus accounts receivable minus accounts payable equals your working capital. If there are no accounts receivable coming in, and if there's very little cash on hand, you've got a problem on the ledger, one on the ledger side, and then accounts payable keeps piling up. Pretty soon they'll cut your funding off, and there goes the business. So to make sure that you're able to fund your accounts payable. This particular loan is in place to make sure that you stay vibrant, resilient, and keep making those payments that you normally would have paid had the disaster not occurred. Next slide, please. Loan amounts, maximum amortization, as I said earlier, is up to 30 years. Fixed interest rate, and I want to repeat that word, fixed interest rate, 2.75% for most private nonprofits, 3.75% for all businesses of all sizes, maximum dollar amount, $2 million. Now, the second line item right below the economic disaster injury loans are limited. It talks about business interruption insurance. We've been advised that no insurance company has any coverage for business interruption for COVID. So there will be no recovery, there will be no insurance payments. So the maximum dollar amount is the amount, the damages of the business recovered. Keep going, please. Next slide. The criterion, the ability to repay and the desire to repay. Credit history measures your desire to repay as measured by a credit score. Repayment is the capacity, which basically means that you have free cash flow. This is a cash flow loan, which basically takes into consideration your revenue minus expenses. What's left over, can that repay the debt? So for example, a business has been around for 2 years. So let's call it a year, January through December, calendar year. Last February, they had sales of $10,000 for the month. This year, because of COVID, that number dropped down to $2,000. Mathematically, the number that we arrive at for revenue shortfall is $8,000. That $8,000 has an impact on the SG&A in the capacity for businesses to be able to make those payments. So anything from payroll, any other working capital vendor payments that factor in, all gets affected. How do we shore up the repayment of those bills is what this economic injury disaster loan is about. Next slide, please. Anything less than $25,000 does not require collateral. Anything more than $25,000 does require collateral. The absence of collateral is not an issue, but the refusal to pledge, that basically means the borrower does not want to put skin in the game, does not want to have any risk of their own. They don't want to do a personal guarantee. Those are all a no-no because that would be reasons for turning an application down. Next slide, please. These are the basic forms that you'll see on the electronic loan portal, on the web portal, an application. It takes into consideration your name, your birthday, your address, the damages amount, your place of business address, things like standard application. Second form is a corroboration of the cash flow numbers and submitted to us with the IRS to make sure that our underwriting criteria is consistent and accurate. For all applicants, if there are multiple applicants, all principals, if there are multiple principals, or in this case, an applicant. I've gotten a lot of questions about businesses with multiple locations. Businesses with multiple locations would apply once because all the locations would then fold into the aggregate tax return that the business owner will provide, which is different from a business owner that has multiple businesses. So if the business owner has multiple businesses, they will then have multiple applications, but multiple places of business, one loan. Next particular scenario, federal income tax returns. 12/30/2019 for the most part, people haven't filed on a business side. So the most recent would be December 30th, 2018. They would need a current financial statement, which is a balance sheet and an income statement. They both have to be dated, consistent. So if you folks provide a balance sheet as of 2/29/2020, please make sure that the income statement matches 2/29/2020. Personal financial statement, the ability of the guarantor to repay the debt in the absence of corporate cash flow. That's what the personal financial statement measures. So please be as accurate as possible in filling that out. Schedule of liabilities is basically what we're trying to address. Who's owed, how much are they owed, when they're owed, and if there's a security interest in what the vendor has provided. Next, please. This particular slide breaks down into the applicant, applicants, affiliates, and/or principals. We just briefly talked about the federal income tax return. We did talk about the year-to-date profit and loss statement just now. And last but not least, the SBA Form 1368. That particular form breaks down sales by month, by year. So for those business owners on the call that are startups, we will use your pro forma income statement that measures sales as long as you were in business prior to the 31st of January. If you were not, then you're ineligible to apply. And the difference, as I mentioned, is what did you do in the corresponding period last year? We took the example of $10,000 last February, $2,000 this particular February. Mathematically, there's an $8,000 loss. How do you benchmark that? That's what this form does. This form gives us that level of understanding of the principals and their business as to what was the revenue without a disaster, what the revenue is, or lack thereof, this particular disaster. Next one, please. This particular slide speaks about location. Some locations are not on the website yet. The request, as Jennifer mentioned, is at headquarters for consideration. As soon as we know, it'll be updated. Business activity across the board, any size industry. This form that's going to be put up momentarily, we'll discuss that in a moment. That will be the size. And the last bullet point really talks about capital at risk, and that differentiates a 1099 from a sole prop. In other words, if an Uber operator drives a taxi, gets his check from Uber at the end of the week or month or biweekly, would not qualify because there's no capital at risk. Definition of capital at risk is an Uber operator that owns his company, owns his car, and has capital at risk as a result of the revenue disruption. So that's the key component of what it means to have skin in the game. Next slide, please. In this particular case, we have a declaration for most of Washington, and the other counties will be added. So that discussion is moot. A PO box in the disaster area would not qualify, so please make sure that on your application you do not list PO box as your address. We actually need a physical address where you receive your mail. Next slide, please. We'll talk briefly about it. Next slide, please. Size standards we'll talk about momentarily. Next one, please. This is the part that we talked about, substantial business risk. The principals must have a business risk resulting from investing in facilities and equipment and by incurring ongoing expenses, which must be paid regardless of whether the operation generates a profit. So realtors comes to mind. They may be working for RE/MAX, but do they actually have any capital at risk? Are their own company? So are they this company subcontracting with RE/MAX in general? The devil's in the details. Next, please. Some ineligible idle applicants: religious organizations, charitable organizations, consumer marketing cooperatives, gambling concerns, casinos and racetracks, illegal activities. That's a no-brainer. Next slide, please. Speculative activities, pawn shops, real estate developers, loan packagers. The loan packaging business has suddenly come alive and people want to pay money to put this together. If you folks have local SBDCs or folks who want to do it for free, please do consult them. Rather not have you folks pay. I'm not dissing their line of work, but these are unprecedented times where every dollar is accounted for and needs to be accounted for. So perhaps we do our best to help them without charging them a fee, but that's just my personal opinion. Last but not least, anybody with an incarceration, parole, or probation is ineligible to apply. Next, please. A few more ineligible idle clients. Now, there's a bullet point there that says concerns determined by SBA to have credit elsewhere. For this particular disaster, let's suspend that discussion. Any business with any level of concern over their revenue shortfall needs to apply, which pretty much means every small business out there, as long as they're in business prior to the 31st of January, needs to apply to make sure that there are funds available for the normalcy of their operation. Period. End of sentence. If they were not in business, that's a startup, then there's no economic disruption. People don't need to pay attention to the credit available elsewhere. That is a standard that is not currently applicable to this particular disaster. Next, please. As you might appreciate, for those business owners, these use of proceeds cannot be used to refinance debt, pay down fixed debt, because fixed debt, by definition, is not part of working capital. Cannot be used to pay SBA loans, cannot be used to pay back taxes. These are payments to your vendors that help support you stay in business. These are payments to your employees that help you run the business. Anything on a short-term basis that keeps your company alive, vibrant, whether it be fixed assets or human assets, think of it that way. So it's current assets, current liabilities, your employees, your vendor payments. Those are the ones that are the ones we need to pay attention to. Next, please. SBA.gov/disaster. That's where you want to go for all information related to your particular situation. Keep the phone number handy, 800-659-2955. Because of the unprecedented volume that we're dealing with, we are absolutely looking to serve every one of our customers, but be patient with us if there is a call wait time. Questions so far?
Any questions? Okay, no, we don't have questions at this point.
Sushil, we understand that employees in the district offices are also receiving some training to help clients manage the loan application process, both in Seattle district office and Portland district office. So hopefully those resources will come online soon also. Marnie has just pulled up the size standards PDF that you shared with us.
Hi, Marnie.
Hi. You see it?
I do. And as a matter of fact, for folks who are not familiar with the North American Industry Classification System codes, the acronym for that is NAICS. And you have a couple of ways of looking at it. Look for your industry, which may be time consuming, or look at the top of your tax return. There is a 6-digit code. And this particular table is set up by that 6-digit code. If you want to scroll down, Darcy or Marnie, whoever's control of the item, you can do so. And then there's your website with a hyperlink.
Right here.
Yes, that's correct. If you click on it, it'll take you to the web portal.
Right here?
That's correct. If you come down a little further,
Keep going.
there you go. That's no, you'll see whatever applies to each one of you. There you go. So if you were to look by revenue or by size standards by employees, you can click on either one of them and see where you fit into the equation. I want to keep scrolling so that people have a general sense of what it looks like. I mean, this is reading material if you can't sleep at night. But ultimately, what drives this table is a 6-digit code that's on your tax return. Take a look at it. If you don't know where to look for it, ask your CPA. They'll tell you. But every industry has a 6-digit code. Questions so far?
I think we're good.
Yeah, we don't have any questions coming on through the chat line, but like with last call, as folks have questions, we can collect them and aggregate those to send to you, and then look to reach back out to people who have expressed questions to us. So Sushil, thank you so much again for joining us today. We really appreciate the clarity of the information that you can share, and we'll be excited to push the notification of the Clark County's inclusion in the disaster declaration soonest. So in the meantime, thank you so much for your information.
Darcy, Marnie, Jennifer, appreciate the role that you play in the creation of jobs and everything else that you do with the economic development concern. Glad to serve. And any questions, I'm a phone call or an email away. Enjoy the weekend.
Thank you, Sushil.
Take care. See you later.
Bye.
Bye now.
All right. Thank you for bringing up the SCORE website. I just would have a word to say that SCORE is a group, a very long-standing group of volunteer business mentors. We have locations, actual offices in Vancouver, Portland, Eugene, Bend, and outreach to Salem. We are available to discuss your business situation with you. Sometimes there is a benefit to simply reviewing the numbers, making sure they're in the right column, cash flow projection, what is your real need for working capital? You heard that term several times. We cannot actually complete the application for you. That's a level of detail we simply don't have time to do. But we are available. We are all working virtually. What has been pulled up here is how to request a mentor. And you simply go to the score.org website, type in when you put your request in there, if you say that you want help discussing your financial situation in preparation for a loan application, we will try to match you with a mentor who has specific financial experience, such as retired bankers, for example. So that person would be available to work with you either by phone or we're using Zoom. We have Zoom accounts. If you want to be face-to-face, I've done FaceTime if you have an iPhone or an iPad. So it is a way for us to meet the need without actually sitting face-to-face with you. So that you will be assigned by zip code to the nearest chapter and then by business interest to a person who has that sort of background. So you can find these links by simply going to score.org. There is a place that says find a mentor, request a mentor, and then it will be assigned by the system to the right chapter around the state, or in our case, we have Southwest Washington in our district. So I hope we can help you. If we can, we will certainly try, and we are all tuning in to these particular meetings. We have these slide decks available so that we have a general idea of the parameters of the programs. We are not SBA advisors. We're totally independent, although we receive a funding grant from the SBA to help people prepare for working with them. That's it, guys. Thank you. Any questions, send them in. We're happy to answer.
Marilyn, I have some of your, some links up here for SCORE, and it might be that you touched on some of these, but could you just briefly, as I kind of toggle through them, could you just briefly describe what it is we're looking at?
Yes, what we're looking at, if you go to score.org, you will find all sorts of free resources that are online. This particular sheet that they brought up is, in general, how to prepare for disaster. Obviously thinking more of a physical disaster, but it still talks to how do you deal with disaster. What I would like to point out, though, is across the top, if you look at the top, you see links that say business advice, startup advice, running your business, marketing, and the next one is finance and money. And just since we have time, why don't you click on finance and money? You'll see that there's accounting basics, bookkeeping, cash flow resource. What is a 12-month profit and loss projection? This is an actual template that's free online that you could use. You might want to look at understanding cash flow, a critical component. That is a free webinar. You click on that and you go to the recorded webinar. So yeah, financial projections. I think the SBA presenter talked about being able to do a financial projection, especially if you're new to business and you don't have years of experience that you can quote. Those kinds of things are all available at score.org, and they're national resources across the country. So thank you for reminding me that those things are a great place to start if you're just trying to understand some of these financial terms in preparation for doing a loan.
Yeah, definitely. Thank you, Marilyn. Is there anything else that you want to share?
No, I think that's the thing. Just sometimes we're living so isolated now. Sometimes just talking to somebody else. I mean, who is, we all sign a code of ethics. None of us can take pay for what we do or be paid by the business we're advising. All of the services I'm describing are free. And so just knowing that we're covered by our pledge that this would be totally confidential. Any work we do with a client is completely confidential. We're under the cone of silence. And so, you know, I think there is benefit there because so many people and businesses are kind of spinning out there on their own. They don't know who to approach, where to find help. Even discussing, is a loan the best step for me? Can I ride this out in some other way? Is there a way to market my services that's more creative? Here, I live in Multnomah Village in Portland. We have a shop that does children's crafts. She's figured out, since the place is closed, how to package craft for the day. There'll be things the kids can make of various ages. The parents drive through, pick up the brown bag with all the craft equipment, pay her. It's a creative, you know, just talking about marketing in a creative way if your physical location is shut down. Just throwing that out there.
Yeah, thank you, Marilyn.
You're welcome.
Have a nice day, and we'll talk to you soon.
Okay, thank you. I'm logging off.
So next we have Darcy Hoffman from Workforce Southwest Washington, who will be sharing some of the programs that are out there right now for workforce.
Everyone, good morning. I'm Darcy Hoffman. I'm the Director of Business Services at Workforce Southwest Washington. Thank you all for joining us here this morning. I know that this is an incredibly stressful time for most of you on the call today, so I just want to recognize that. And Marnie has my contact information up on the screen. I encourage you to jot it down. If you have questions about any of the information that I talk about today, I just really want to encourage you to reach out to me directly. If I don't know the answer, I will work to find one and or get you connected to the right resource. So please do reach out post-call today. So I just want to start with a couple of updates, and then I'm going to talk about both shared work and the standby program for unemployment insurance here in Washington State. But first, I just want to mention that our state's unemployment programs they're all administered through the State of Washington Employment Security Department. And those activities all take place out of telecenters in Olympia. So as you can imagine, they've gone from, you know, an all-time low level of unemployment claims to this big, huge spike in claims. So needless to say, they are incredibly busy working to ensure that our residents are getting their claims processed just as quickly as possible. And I'll say more about that as we get into the presentation today, and give you an update on some of the workarounds that they're implementing. On our last call that we held earlier this week, I announced that Employment Security would be hosting a WebEx for unemployment claimants to just go over some frequently asked questions, and in particular, talk them through standby status and what that means. So they did hold their first WebEx this morning. As I understand, it went very well, and they will either be posting a recording to that WebEx so that those of you that are on the call today will have access to it, or they will be repeating them. So if anyone is interested in sitting in on one of those or in sharing this information with your employees, reach out to me and I will add you to my communication list and make sure that you get a link to the WebEx. And then also our own local WorkSource offices have begun to host Facebook Live events. And they're just showcasing general information about filing unemployment claims. They're also answering questions via chat as they go. So if you or your employees are interested in participating in any of those, I would encourage you to follow them on Facebook. You can find them it's WorkSource Vancouver and Cowlitz-Wahkiakum. I know it's kind of a long name. Just start typing WorkSource Vancouver and they'll pop right up for you. And then the last thing before I get into the programs is that all of the WorkSource centers around the state of Washington have moved to a virtual service delivery model at this point. So all of the critical services that they provide are still available to people over the phone, through WebEx, through email. And if you or your employees want to reach someone, you can call them here locally at 360-735-5000. The staff in the centers don't process unemployment claims here locally, but they can help people troubleshoot things and answer some of those frequently asked questions for people. Okay, so the first program that I will talk about is shared work. And so Marnie, maybe if we could flip to that page of Employment Security's website, thank you. So shared work is a program that you can use to cut your employees' hours rather than cutting jobs, if that's an option for you at this time. So basically your employees can collect partial unemployment insurance benefits for the hours that they lose, and you stand a better shot at retaining them because any of the work search requirements that would normally apply to unemployment are waived when you're participating in shared work. So I'll give you an example of what it could look like. Let's say your employees are full-time employees, they worked 40 hours a week, and you're in a spot now where you want to cut people back 50%. So now they're only working 20 hours a week. So in addition to the paycheck that they would get from you for those 20 hours, they will also get 50% of what their regular unemployment insurance benefit would be. It's a super flexible program. As the employer, you can change what it looks like from week to week in terms of the level of participation, meaning the number of employees that you have participating, to the number of hours that they're working. So that can flex from week to week. Couple things that you should know is that employees do need to maintain their benefits, and they also need to be paid hourly. So it's not to say that salary employees can't participate. They absolutely can. You just need to be able to convert their salary into an hourly rate. And part-time employees are also typically going to be eligible as long as they would otherwise be eligible for an unemployment claim. So that's a little bit about shared work. Marnie's on the page right now where you can learn more about it. You can apply for the program. And then Marnie, maybe flip over one more to the standby page. Thanks. This has been the program that we've had the most, I think, questions about. So standby can be used when you're fully laying off employees, but you do have an anticipated return to work date for your employees. You can use it for up to 8 weeks. And under extraordinary circumstances, such as what we are in the midst of now, additional time can be approved. And you can request standby status for your employees a couple of different ways. And also, actually, let me back up. With standby, your employees are also exempt from any job search requirements as well, which is one of the perks of this program. Your employees can request standby status when they open their claim. And you as the employer can also request standby status when one of your employees opens a claim. You'll get some communication from Employment Security about that. And at that time, you can respond and let them know that you are requesting standby status. So we have heard that and received some guidance from the Unemployment Insurance Division that they're creating a workaround right now to allow claimants to request standby for up to 8 weeks versus the normal 4 weeks that they've always requested in the past. And so their advice has been just to please, whether it's you requesting it or your employees requesting it, just request 8 weeks. It basically just alleviates some administration on their end so that they can focus on other things. And one of the other things that you and your employees should know about standby is that right now a lot of claimants are getting denial letters for standby, but unemployment wants to assure you that they are working to fix this. Encourage your employees not to be alarmed. There's no need to contact anyone if they get that denial response. They are going through and processing as many of those denials as quickly as they can. So it's just basically a glitch in the system, just hasn't quite caught up to the time that we're in today. Couple of other updates. You may have heard Governor Inslee announced recently, I believe it was Wednesday, that our state is waiving the waiting week for unemployment insurance. So typically with unemployment insurance, workers have a 1 week period of time where they are not compensated by their employer and they're also not compensated by unemployment insurance. So we're on a waiver of that right now. So the waiting week is gone, which is a really good thing. And then in our last Zoom meeting, I had a question about how employees can estimate what their weekly benefit amount might be through unemployment. So yeah, please click over. Thanks, Marnie. There is a page on Employment Security's website where you can navigate that. If you look at this little chart toward the bottom of your screen, right now claims are being based off of wages earned from October of 2018 through September of 2019. And then once we switch over to April 1st, that base year is going to change from January to December. Just to give you an idea of how to use this chart. So if you scroll down a little bit more, Marnie, all you will need to do is figure out whatever your base year is and estimate your earnings for each quarter of that base year, and then choose the 2 highest quarters and plug them into these fields right here and hit calculate. And it will estimate for you approximately what your weekly benefit amount should be. So there's that resource for you. So things are just changing almost daily with these programs with regards to who's eligible and how people are eligible, and the way that our telecenters are processing and responding to these claims. So just when in doubt, I encourage your employees just to file a claim and let the telecenters determine their eligibility. There's really no harm done if your employees end up not needing the claim. And the same goes for shared work. If it's even a consideration in your mind that shared work could potentially work for you, go ahead and apply for it. even if you end up not needing to use the program. That's okay. And then the last couple of things I want to say is that claims are being approved. At this point, our staff in the telecenters are working to approve claims, not to deny them. You know, they are incredibly busy. I believe they have around 60 job openings right now that they're looking to bring in just to help support the volume of the work that needs to be done. So I would say for most people, you can do all of these things online. I would encourage you and your employees to try your best to do that. But if you do need to call the telecenter, you absolutely can. But there will be, you know, longer than normal wait times. They do have a callback option that you can request to have somebody call you back, so you could give that a shot. But I just really want to encourage you to try and do what you can online. And again, please feel free to reach out to me to connect with WorkSource if you need some additional guidance. We are happy to try and help where we can. So I think that's really about it. Marnie, I can hang out for a little bit if people have questions.
I have a quick question for you. Can businesses use both shared work and standby at the same time?
Great question. Yes, you can. So it's common that you might have a department that you need to put on a full layoff. In that case, as long as you do expect to bring them back in a couple of months, you could request standby for that department. And maybe there's another department where you have a little bit of work that needs to get done. You could request shared work for those employees. So yes, the answer is yes.
Gotcha. And we have one more question Monica's going to ask.
One question from the audience, Darcy, for you in reference to when you mentioned unemployment in Washington specifically. Does this info mean that it does not apply to Oregon businesses?
Yes, correct. So the information and the programs that I talked about today are going to apply to Washington businesses and to employees who work in Washington. So if you are a Washington-based business, but you have employees who live in Oregon but worked for you here in Washington, these programs apply to them. For any Oregon-based companies that we have on the phone, feel free to connect with me afterwards. Oregon has very similar programs. Their shared work program, for example, is called WorkShare. They also have a standby program, and I can get you connected to those in Oregon as well. So just reach out.
And we have one question for Sushil. Sushil, are you still on the line?
I don't believe he is, but I am happy to reach out to him.
Okay, perfect. Zach, we will follow up with you on that. If you want to just send us your either your email via the chat, or feel free to send it directly to Darcy or Marnie.
I've got it. Yeah, thanks. Perfect. Great. Well, I know that this is just these are unprecedented times for all of us, and it's very difficult.
We have just another question come in if Darcy is still on the line.
Yep, I'm here.
Okay, that question is, it's sort of a matter of prioritization, and the business owner is asking, as a business, should we apply now for shared work or standby, just in case we would need them for our staff?
Good question. So for shared work, I would say yes, apply for it now. For standby, that one you will have to wait until you have made the decision that you will be fully laying off your employees with the intention to bring them back before you request standby status for those employees. And I do have a bit more information about how Employment Security is requesting companies to notify them about standby status requests. It's a bit lengthy. I hate to get into those details at the moment. I'm happy to, Jen, Marnie, Monica, if you would like me to. Otherwise, whoever asked the question, reach out to me and I'm happy to send you some language in an email or talk you through it over the phone.
Great. And here again is our contact information. You can see Darcy's contact information is here. So whoever asked that question, if you want to reach out to her, you can definitely do that. But I'm here as well. Darcy is available. So our website, CREDC website, is being updated every day. So it's definitely something you'll want to check back with frequently.
Thanks everyone for calling in. We're doing our best to accumulate the broadest base of resources to share with you. We did receive another question on timing for the SBA loans once the disaster declaration has come into place. It's been the standard protocol for the Office of Disaster Assistance to share that applications could take 2 to 3 weeks to process. Obviously, we're in an unprecedented time right now, but that has been the language they've used for past disaster declarations. And then an additional 5 days after the approval of a loan package for money to be dispersed. So that gives a little bit of a window into the timeline for post-declaration when money could be received. In lieu of that time lag, we're encouraging companies to reach out to your small business banker and also have a conversation about your current circumstances and what resources at the local lending level you may be able to access. Now, next week on Wednesday, we'll be hosting a call with lenders who are a part of our CREDC community with bankers and with credit union professionals to talk a little bit about what they're observing and the conversations they're having with companies and what resources can come to bear to help bridge the gap in the meantime. So thank you so much everyone for calling in today. Do visit our website. The presentations that were walked through today and the web links are posted on our website. Please fill out the survey you can access on the button at the top of the page you're looking at with Marty right now. Share with us where there are additional resources that we can try to seek out for you, and we will do our best to accumulate a good response. Thank you so much for calling in today, and be well.